I think what I'll do, like in, I don't know, 5 or 6 or 7 years, whenever it is, when we're ready to weaken the dollar, when the dollar is super strong, we're near a peak. I think what I'll do is I'll put a huge position in South Africa just to carry the rand. And what I'm actually doing is saying, all right, the dollar is not going to get any stronger, so I might as well buy as much rand as I can, because every day my dollars would buy less rand, irregardless of what the rand does. So I would do that. But also, I know if the dollar will weaken, gold will go up. And if gold goes up, the rand would strengthen. So I would actually be converting my dollars at the top and buying rand at the bottom. And life is good. The Czar Swissy might be good. Because you're picking up the negative interest rate. Let's see what time is it. I guess we're pretty close to getting started. Ba-da-da, 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 ba-da-da. Yeah, yeah, all right, yeah. I'm just saying, it's always relative, though, right? So there's usually something better somewhere else, right? There are so many different currency pairs and time frames and stuff that no matter what you just did, there's probably something a little bit better somewhere else. At least I don't hold myself to the standard to say every trade I take is the best trade that was possible. And so yeah, if you're doing it that way, but yeah, if you're going to do the carry, I would definitely not do the dollar. It's just not a carry trade. What you're doing might be successful. It just wouldn't be interest rate related. It'd be dollar related. So that would have more to do with dollar weakening than rand going up. But you know, I might open a South African account if I could just catch ZAR versus Swissy, ZAR versus yen. I could consider having an exotic account. They'd probably give me some other things. I used to trade like Turkish lira as well, Turkish lira, yen, Israeli shekel. Excellent move on the pig. Yep. The currency of the week. Absolutely. And it was one of those things, right? They trigger, it falls. They don't trigger, it goes up. Just as long as you did one or the other, you're fine. Right? It's it's when people do something in the middle that's very odd and curious, right? Because then you're like, well, what were you doing? Making it up as I go. Morning, everybody. Let me remind you, that trading forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to forex.today, our daily webinar. Free to all who have registered at forex.today. I hope you've posted your trade plan of the day. How many people here have posted their trade plan for the day at forex.today? Mm-hmm. Yeah. And if you didn't, did you leave comments? Okay. Daniel, that should have been fixed several days ago, so I don't know if you've tried or not. Okay. So anyways, hey, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. We do these sessions 7:30 in the morning here at forex.today, Monday through Thursday. You'll find me first Friday of every month at FX Street for Trading on Farm Payrolls Live. I'm here to help. I'm here to answer your questions. By the way, I'm sick. Yeah, I'm sick today. Yeah. But I'm here anyways to answer your questions, keep you focused, help you with your trade plans. I will not belittle you with telling you what to do. I will treat you like an adult. We can discuss your strategies together live as a community. Thank you. So, yeah, I guess we'll just start. Here we are. What am I looking at? USD Kitty CAD. What tools do we have? Well, I don't have candlesticks. I don't have bars. It's just a line chart. I have weekly pivot points and monthly pivot points. So, late last week, we entered the aggressive bullish target for the entire month of March. We also hit a resistance pivot for the week last week. Huh. Whale oil B. We've opened this week here. You can see we did some analysis last week. But let's put it here. Here's a pivot cluster this week. M4, which is resistance. Weekly central, which is resistance for a bear in a in a downtrend, in this case lower low, lower high. And our target would probably have to be this cluster down here, weekly M3, sorry, monthly M3, weekly S2. Right? If you were a bear, isn't this just irresistible? Selling at 35, going for 33. Yeah, they're tight ranges. I mean, it's only a couple hundred pips, but it's something. But more interestingly, look, if that actually happened, look how it starts at the monthly target, drops significantly into support, respects support, comes up and respects the monthly pivot again. So I look at things like it's definitely playing off the monthly pivots. People know that this is resistance. And if you're a bull, that's where you take profit. That's the most important thing here. If you bought it way down here, you say to yourself, if it comes up to 135.33 or whatever it is, I will take profit. Right? Not here. Not here. Right? Isn't that amazing? If you really think about it, where's the first? In here. That is the monthly target. Everybody agreed, and everybody that mattered, everybody agreed that that's where you get out. This is not people shorting. This is people taking profit where they're supposed to. And this, based on that move, there is potential for continued CAD strength. And I don't even like CAD. at the moment. Isn't that funny? How funny is that, huh? So that's technical analysis. Now, if you're a bull, you want to buy it down in here, don't you? Monthly R1, and there's a weekly M2. Okay, so you're going to look for something like this. Okay, and hopefully make a higher high, right? The problem with that strategy is you're ignoring monthly pivots. So maybe tomorrow, huh, when the Fed jacks up interest rates, but I have a feeling if they jack up interest rates and then they say no more, no more anytime soon or whatever, right? No more interest rate hikes in the first half or something, whatever they say, it comes out not bullish enough, then you will find yourself down here, lickety split. Sorry. You know what I'm talking about? Look at that. Here's all the tools we need, huh? Price action, pivot points. I have no other tool. La di da di da, la 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 la, la di da di da, la 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 la, la 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 la. Ooh, ooh, ooh. Da, da, da. La 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 la. Look at that, just redonkulous resistance, huh? Just disgusting. Look at that. Of course it's gonna fall. Look at that. Oh my god. Oh my god. Even if it went higher up, it would still fall. But yeah, interesting. Seems like, if we take this across, there seems like there's something going on there. Doesn't it seem relatively significant? You can kind of grab all of this, right? And the next one's way down here. I mean, ooh. So I'm not really bullish on the kitty cat, but you never know because sometimes it's just timing. So like when you think CAD, you think oil, right? Or at least you should. Don't you remember me just, what was it, yesterday? Saying that, hey man, what are you going to do? Sell it down here? Right? I said, if you wanted to sell it, where were you at 55 or 54 or 53 or 52 or 51? Or like, why would you sell it down here? Well, CNBC told me to. Right? Something like that. Like, why would you sell it down here? So the opposite of that, and I think we talked about this M2, you could buy it at M2 because you can't sell it, right? You can't sell it, but you can buy it. You can't sell it. You don't have to buy it. And it's dangerous to buy it, but you could buy it. You just can't sell it. So you could find yourself here at 48 and some change, longing, right? This is 49 up there. One of the things I think we talked about is maybe you could have it break above the orange line for a higher high, higher low scenario. But if you're a bull, the target here is off the M2, right, up to M4, back to the top of the range. Could happen, right? It could happen. I'm not saying it will. It could. But the thing that I am saying is you can't sell it, right? Unless you're selling it high. Okay, so what occurred yesterday? So maybe you had this, what used to be support is now resistance. It's called role reversal. Very basic price action. And so you could be doing that now. Okay? You could be, sure. Yeah. But you got to be careful because it's not a great place to sell. You're a bit late. I mean, you're very late. But okay, I guess you would play it like weekly central down into 45. Well, I'll tell you what, if it drops down here, I'm going to buy it. I'm not a bull on oil, but I'll buy it at 45. Sure, I have no problem with that. Sure, yeah. Do I use daily pivots? Sure, why not? I use them a lot less than before. They used to be the focus of my trading, but I often focus. So, like, if I'm doing daily pivots, it's more like at the London Open or New York Open, maybe, and it's just helping me catch direction. But I mean, they're only day trades, right? They're like 30, 40, 50 pips, right? Right? Great. But they're hard to coach with because we'd have to be very precise in our timing to discuss a strategy. But you trade them the same as monthlies and weeklies, right? So it's easier if I'm helping you pick the right strategies and stuff to use something that is less time sensitive, like a weekly, right? But like oil is oil. You're either going to sell it here or you're going to buy it down here. I mean, it's just right, regardless of pivot points. But what can we throw in here? Well, here's daily, right? Here's daily. So we got the daily here and the weekly here, and this is the beast. So I got knocked out of break even on the Article 50 stuff. Here, my trigger is still down there. And if you remember, I was up like 50 pips, but I told you I don't care about the 50 pips. I'm going for 300, and the way I'm going to make 300 is, the British government will make a call on how to run their economy in such a way that the British pound goes up this week. Where they make a call in the way that they run their government to make it come down this week. I'm not in control of that. Why would I? But I know when we get to the scenario where they make that such a decision public, I can't lose money. So it either goes up here and I make well more than 50 pips, or it collapses and I lose nothing. So I like being in that scenario. Okay. Do I really want to buy this down here? I'm a little worried about this. If it dropped down in here, because then I'm buying lower lows. So I think I'm going to get rid of this now. I'm just less convinced. Now I have no exposure, no risk exposure here. The higher high, higher low, higher high, higher low. This was supposed to produce a higher high. It could have produced a higher high. It didn't. So now I don't want to be in it anymore. I changed my mind. I changed my mind. That's it. I don't want these conditions. I don't like it anymore. Right? What's changed? We're not making higher highs. I don't like it anymore. Give me my money back. That's the way to do it though, isn't it? All right, so a couple of people saying they're struggling with the login, so I'll beat the programmers again. I don't mind beating them. That's what programmers are for. But you should be able to log in, eh? All right. Yeah, yeah, yeah. I get it. I get it. In fact, maybe I'll do it right now. Hang on. Many people are complaining that they cannot log into Forex today. All right. Okay. So questions about a 5-minute chart and all that kind of stuff. All right. Here's what you do. All right. You look at this, and I'm thinking about trading a 5-minute chart. Okay. What am I thinking? Yeah, I'm looking for support and resistance, and I'm not convinced that we're at resistance. It kind of looks like we're at the bottom of a range, doesn't it? It's not as far down as I would have guessed, down in here. Okay. But somebody asked about the dailies. So how do you play the dailies? Well, let's zoom in a little bit more. Is anyone playing the daily pivots as support? Well, daily M1 is support. Daily S2 is support. So I think if it got down to this area, the weekly M, I think there's another pivot in there. Monthly M. See, it's a weekly M2, monthly M2, daily S2. If it dropped down into here near 39,000 psych level, then I would drop to a 5-minute chart and I'd look for a cross up like this, or 5x up, or a higher high, higher low. So I'm looking for like reversal type patterns at that support area. And that's how you use the 5-minute chart. Okay, I know, I know what's going on with the site. The programming team said they were going to address it, but I guess they're not. They're having trouble. So hang on. Life is great. Almost done. Nope. Don't panic. Okay. We've been updated. All right. So that's one way of doing it. Price action. If you're doing small time frames, do you know what like the most basic rules? I think I'll draw it. Let's do it this way. The basic rules of price action. That the universe revolves around patterns like this. Okay, what is this called? Don't say trend. Be specific. Don't say ABC. Just give me the answer I want, guys. Downtrend. It's a low, lower high, lower low. Okay. What is this? An uptrend. Hey, you guys are catching on fast. Which one should you be selling? Yeah, the one on the left. I mean, it's silly, isn't it? But that's all there is to it. So, for example, let's look at the right. If there's an uptrend and you're buying dips, so obviously this is buying opportunity. How do you feel about something like this? Yeah, Daniel's got it. It's a clue to stop buying. And the reason for it is there's 100% Fibonacci retracement. 100% retracement. It's definitely a cautious line. Yes. Okay. It's something to take notice of. Okay. Now what? We call that a double top, right? Nick, it's definitely not a sell, sell, sell. Prepare for the lower high. Thank you, George. George got it. Wait for the LH, lower high. Perfect. Does anybody know another word for it? What's the secret word? Roll reversal, no. Hammock. There we go. Thank you. Hammock. I did a presentation, I don't know, a couple of years ago now, where I said that you should be practicing looking for these scenarios and preparing to sell the lower high. And I said, just do it like a drill, like a military drill. And then as an analogy, I used the idea of a sailor on like a battleship or a submarine, right? But I was thinking battleship. Just imagine that you're sleeping in your hammock and it's just gently rocking. It's the middle of the night, and all of a sudden, all hands on deck, boop, 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 right? And you have to like jump out of your hammock, jump into your boots, and just run to your battle stations. And you got to jump out of your bed, and you're running down the hall, and then you got to duck your head under the door thing because it's made out of steel, and then you got to run, you climb up the ladder, and get to your guns, right? And then the captain comes over. All right, stand down. This was just a drill. And you're like, a drill at 3:27 in the morning? Great. You go back to bed. 6 o'clock in the morning. Brr, 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 battle stations, battle stations. You jump out of your hammock. You're running down the hall. Duck your head under the door jamb. Climb up the ladder. Get to your gun. This is the captain speaking. This was just a drill. Everyone stand down. And they do this over and over, day after day, week after. In the middle of lunch, you're eating lunch. Run. And they just drill and drill and drill and drill until one day it's in the middle of the night. You're fast asleep in your hammock. The siren goes off, and you jump out, and you're not even opening your eyes anymore. You don't even open your eyes. You can run down the hall and tuck your head under the door jamb and climb up the ladder and not even open your eyes just because you've done it so many times. It's just second nature. And that's what it comes from. Looking for double bottoms with a higher high or double tops with a lower low. And the next thing you know, you're going to sell the next rally here or buy the next dip. Okay. Okay. That's all it is. And there's little micro ones in the 1 minute, right? You can see a break up, pull back. Little micro ones, but it's not that big of a deal here. Okay. So the key there is noticing when there's a trend and noticing when the trend is coming to an end and putting that together in your charts. Okay. Another key concept is role reversal. Okay. Lower low, lower high. Now notice the pivot here. Resistance, right? High, low, sell it again at resistance, right? Which is the high, low, look to sell it here. Yeah, it went a little higher, don't cry. so on and so forth. Hang on a second. And none of this is really good price action. Okay, but when you have a lower low, you should look for a lower high. This is a problem though, isn't it? Isn't that too much of a pullback? It's telling you that there must be support nearby. Okay, because whoever sold up here and took profit here didn't get back in the game. They didn't short again. I mean, it's a concern, isn't it? Right? If you think about it, right? Somebody shorted here, came back up. They shorted exactly where they were supposed to. Came back a little much. That's a full 618 retracement. That's a little much. And then look at the pullbacks are bigger and bigger and bigger, right? You see how they're expanding? This is like a 382 retracement. This is a 618 retracement. This is 100% retracement. Now, back in the day, one of the things I tried to study for a while, and by study I mean just figure it out on my own. I called that frequency. Now, I think if you look up frequency, you're going to get something completely different. But I thought of like an oscillator, how this first move was only a 382, right? And the next one is a 618, and the next one is 100 or a 786. You know, the frequency's changing, right? Bigger waves, and that's not a good thing, right? The market was aggressive here, much less aggressive here, and they're actually conservative or even out. Just the market's changed from bullish to neutral. Okay, I looked at that as frequency. I studied that for a while, but it's just something I notice. Okay, so it seems to me because of these pullbacks, right? Everybody shorted, right? Uh, some people got out here. Some, less people shorted. I don't know. Like, for example, if the market was aggressively short, they would have shorted the 382 Fibonacci retracement, and they would have shorted this lower area. You see what I mean? Let me change the colors here. The market was so aggressive, what should have happened was down, up, up, and then down, right? We should have hit it earlier. So because it didn't, there's less bears. You see? And then we did hit the target, and what did we get? A 382? No. A 50%? No. A 618 retracement? No. The 786 retracement? No. Did they use the pivot to sell? No. What did they do? It went 100% retracement. I mean, somewhere in there is information that you should acknowledge, right? So Linda, I think missed the point of the hammock thing. Why did I go? Because you're sleeping in your hammock, and you can run through your drills, right? Just in your subconscious. You're always looking for double tops, double bottoms. You can do it in your sleep. They don't have hammocks in Navy ships anymore, Richard? Huh, too bad. There's a great opening scene to the movie. I think it's the Island of Dr. Moreau. And yeah, it's opening scene, and he's sick, and he's in a hammock in the belly of a wooden ship. And he's sick with something, scurvy or some horrible, and he's just wiped out. Has no energy. He's just, and it's hot and damp down in you know down in the wooden belly of the ship, and he's just laying in the hammock waiting to die. and it's just slowly rocking, and the sound of all the creaking wood and the sort of the beads of light coming down through the cracks above him in the wooden floors. It's just it's a true hammock experience, waiting to die. They dump him on the island. The island of Dr. Moreau. So anyways, there's a lot of information here if you're just using price action, right? Oops, that's funny. Turn that up. Okay. There's lots of information here, even though it's a 1-minute chart. There's a significant decline in the number of bears. So it makes your selling a little bit less attractive, right? To know that there's less people here. Is there a reason there's less? Well, maybe it's because we've hit our first conservative bearish target for the day. So for those in my swing trading class, we've gone over like monthly pivots and weekly pivots and various strategies for both. I think it's interesting, isn't it, that we can then take a look at this and say, let me get my drawing tool, to say M3 predicts an M1 bottom. I mean, it's stupid, isn't it? Like, how can it be exactly to the pip on both sides? Like, do you remember trading when you had no idea what was going on? It's sad, isn't it? You're like, dang it, right? I mean, look, there's clearly the market is paying attention to these levels. I mean, there's no doubt, right? Like exactly to the pip, exactly to the pip. If that's your top, that's your bottom for the day. Daily M3 to daily M1. Textbook. Read my book. I wrote that pattern in my book 8-9 years ago. I don't know. I mean, it's just so straightforward. It's stupid. like, right? You're like, oh my God, right? Somebody asked, how do you trade a 5-minute chart? Well, there's one way. Have a trade plan. What's your trade plan for the day? I'm going to sell British pound at M3. I'm going for M1. Done. Like, okay, great. So there's your strategy. What are your tactics? Right? What tactics would you like to use on this 5-minute chart? Okay. Well, you can go lower low, lower high, sell, lower low, lower high, sell, right? And then this is a 15-minute move, so we can actually have to do it this way. I got to change colors here. This is instead of a 5-minute, right? This is a 15-minute 382. Okay. It's also, and I got to change colors again. Right. If you look at this, you see this to the left. Okay. Wait for it. Wait for it. Okay. It's in here. It's not quite right, but it's close. So when you see price action like this, you should fib this area. Okay. And do you think it's important that this is the London Open? Of course. So don't be silly. Don't be silly. Of course it's important. Right? Okay. And then on the 5-minute chart, should you sell that? Sure. Right? Look left. Trying to get this as straight as possible is what I'm doing. Okay. You see? Oops. Right. Low, low. There's the resistance. Low, low. There's the resistance. Right. So now we have this scenario where you might have a double bottom. Right. What's the next potential move here? Strategically, you could get something like this, right? All I know is I wouldn't want to sell it down in this area below us. The reason for that is it's support, and I can't sell it support. So I could prepare for a double bottom, higher high, higher low. You get it? And the resistance, let me get rid of this pivot. Okay, the resistance is in here. Okay, so what you could look for is a scenario like this. What do? This is a 5-minute chart on the beast, otherwise known as the Widowmaker. What do you do if you see a move like that? Meaning candles come up here. What's your next move? Wait for what? High or low? What's the secret word? Hammock. Thank you. And the way to set that up is you're going to fib this. And your buy zone is going to be somewhere between the 3A2 and 618 Fibonacci retracement. You're going to look left for potential support. This could also be support, right? And then a pivot, right? That's your weekly central. So my best guess at that time would be back down to the central, which is a 50% retracement. And then on my 5-minute chart or even my 1-minute chart, I will look for a move up. And I will long it. Okay. My stop will be below here. Okay. Hope that was helpful. So it's one of these things. I'm not predicting it's going up. It's just I can't sell it here. So if it falls anyways, I don't care. I just won't be with it. What's the next potential opportunity? I'll buy it lower. Or not buy it lower. I will look for the same type of pattern. A double bottom higher high down in here. Yeah, that's buyable. See, I could, right? You even if you want to sell it here, the issue is they're high risk pips. Okay. If you don't like it, then kill your dailies, let's say. Okay. Now what are we talking about? Swing trading. And that's the difference where if you decided to sell it higher at higher levels of resistance, then you don't care about these little daily pivots and these little bounces. Oh, it makes up here and then it's going to sell down there, right? Because remember, the bears are going to try to sell at resistance. You would, I mean, I don't know. Okay, that's the difference. If you're trading it on a 5-minute chart, you'd probably have a different strategy. You trade it than trading on a 4-hour chart. If that makes sense. Okay. See, the hourly says it's oversold. 4 hours says it has room to fall, which to me means it's going to hit support and then it's going to rally up significantly and then it's going to fall. Okay. Ooh, look at that. That's why you wait. So if you knew that that was a daily pivot, you wouldn't have sold it. If you don't use daily pivots because you're using longer term strategies, you're sort of still short, right? You see the difference? You wouldn't enter a trade here. What very often is happening are people exiting their trades that tried to long it prematurely, or let's say too aggressively. Okay. So let's in real time go back out and find, I didn't mean to go that far out. Where's the next level of support if you were a bull? Weekly support actually in here looks pretty good too at 38.50. So maybe 39, maybe 38.50. And so now I wait. I'm like a sniper. Now I wait. Maybe I buy it down here. Or I wait for a 1, 2, 3 here. Wait. That's it. Just wait. How many times have you guys got caught because you saw something like this? All of a sudden, boom, it breaks to the downside. So you're like, oh my God, I guess it's going to fall. Sell. Have you ever been caught in a scenario like that? Does it often work for you? Yeah, no, it doesn't work for me either. So you got to like tame those emotions, though, all right? That's why you have to stick to your plan or stick to your strategy. If you think this is going to go up on this chart, I know it's hard to see with these pivots, but if your plan is to buy it, then you simply wait, right? That's it. And if you get a bunch of red candles here, you say, huh, well, I guess the next level of support, I'll try again. Or you just simply wait for the 1, 2, 3. I mean, that's the idea with the hammock idea, right? You're just waiting. Double bottom, got it. Higher high, no, don't got it. Right? I mean, it's that simple, right? Double bottom is a potential reversal pattern, right? But it's more aggressive buying a double bottom than waiting for a higher high, higher low. That's much more conservative. Now, if you bought a, let's say, a double bottom here at 39.50, and I'm like, why don't you wait for the higher high and higher low and buy around 39.55? The difference is, let's say, less than 10 pips, right? But the risk is significantly lesser, right? You see the difference? Money-wise, there's almost no difference. Risk-wise, there's a ton of difference. So you might just sit around, just sitting around waiting for a double bottom higher high. Okay. If you wanted to sell it, you should have sold it here. You should have sold it here. You could have maybe sold it here. But again, now you're so close. So really, you want to sell it up to 21, right? So whatever. Doing it now is just ridiculous. I think people bought the double bottom, jammed their stop, and then been taken out. And so it's overly bullish. It's overly aggressive bulls that took a shot, jammed their stop, and now they're getting stopped out. Great. Doesn't mean they're short. Yeah, it's not the market tricking you. I think it's like I just said, overly aggressive people that just say, look, let me try to grab this. I think what they're doing is they're playing the double bottom and they bought it here. Then they jam their stop. That's it. All of a sudden, out, 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 out. Because they're long, right? So to offset their long positions when their stops are hit, the broker has to put short positions to offset them. It's not new people selling. Because remember, the people that sold, if you looked at the weekly pivots and stuff, they were smart. They sold right where they were supposed to sell, right? They did what they were supposed to do. Great. But therefore, I would hypothesize with you and say if they knew where to sell, they also know where not to sell. They're not going to sell it. If they sold it at daily M3, right, and their target was daily M1, and we saw evidence that they definitely knew what was going on, then there's no way in hell they're going to sell at daily M1 again. They're not going to sell at support. They knew it. We saw it to the exact pip. They knew what they were doing. Then why would they sell again at M1? They clearly know that that's high levels of risk. So this is just maybe sloppy traders at best, but most likely it's just people buying where they're too aggressive, and they're getting knocked out. Okay, and this is probably a better place to buy anyways. Okay, but I don't think it's new people shorting. There's no way for me to prove that. But again, don't underestimate the power of dumb money. So looks like yen is strong here, yen is strong here, yen is strong here, and oil falling. When oil falls, what happens to the yen? Yeah, well, it's just one thing to notice, right? Cool. Here's my CAD. Guess we look at this one. Yeah, this one's unfortunate because it was doing so well. So again, watch up here. Now, here's where a moving average comes in. It can be very helpful to measure whether this is going to double top or not. So I'm going to use my double top tool. Okay, this is highly proprietary. Please do not share it with anybody. Please. This is highly proprietary. Don't share it. Down, up, down. It's not that clear. Yeah, if the 55 is in control, then you're going to say, "Hey, man, we're going to double top." So I don't. In this scenario, this is a rollover. You see how it's bullish, bearish, bullish. I didn't think I needed this, but let's do it. Let's do this one. It's inconclusive. I can't tell which one's really in control. Yeah, inconclusive. Oh, we'll have to wait then. Wait. So this wasn't an amazing buying opportunity as far as the low side. It's not an amazing opportunity yet on the sell side. Remember, if you're a bear, 135 would be very interesting. But then you need oil to go up, right? So, hey, just be careful on a day like this. So what did I say? Was it 48? We're getting pretty close to that 48, right? Nice roll reversal. So one thing I have to do here if I'm using price action is I have to take this low and move it across, and I might sell here later in the future. Okay. Try to get to the Where's the next line? $45. Yeah, I'd buy it at 45. Sure, I'd buy that. Yeah, 45. Sure. Okay. Yeah, there are safer places to sell. Like, as you can see, for weeks we knew that this was resistance. All this area up in here, right? And then maybe this is a role reversal, which we never even got. But I believe if you look at this objectively, I mean, maybe you agree with me, maybe you don't. But I'm looking at this. Let me draw it. Let me get the drawing tool. You look at this, this, this where we are now, and this kind of stuff going on here. A little bit of this noise, I suppose. This was support, that was resistance, right? This was respected in here, this was respected there, that was respected there as resistance. I mean, there's something going on in here, right? And therefore, I just can't sell here, even if it falls. Doesn't have to. I don't have to be on it, right? I don't have to be. I don't have to be on it anymore. I was highly recommending this stuff up here, right? Right, as targets, sell side entries, and we actually sold it here at 54. I didn't know it was going to go to 48, but I mean, so you just pick your lines of where you want to participate, right? Like selling high makes sense to me. Buying high doesn't make sense to me, right? We knew this was an issue here, right? And it was a sort of came in play here, came in play here, came in play here, came in play here a couple of times, right? Came in play here. I think it was our target, wasn't it? For the upside sell, right? So we sold at 54 and only got out at 52 or something, right? So we only know what we know, and you need to make decisions. The market is falling quickly. Do you want to sell it here? And then you just got to feel comfortable with that. Now, what if it bounces, right? And you can get an up and a down. That's fine. I'm cool with that. In particular, it'd be great if it kicked off this old support area. Great, I'm cool with that. But in the yellow zone, I just can't sell without taking a lot of risk. And think about all the lazy traders that are selling now at 48. Like I said, where were you at 55 or 54 or 53? Like, where are you then? No, I want to wait for it to fall $8 and then sell, right? You're like, what? So you just got to get comfortable sometimes walking away just to say, look, I get it, it's falling, but these are high risk pips. I'm not interested. It's not what I do. And then you can look the other way, right? So if the there you may sell a false rally, right? You would sell maybe something like this, or you're waiting to buy something down in here, and then maybe you would sell this where we are now at 48. You're like, well, maybe I'll sell it at 48 next week. Well, if you sell it at 48 next week, why wouldn't you sell it at 48 now? What's the difference, guys? You're like, it's the same thing. It's 48. What's it? Why sell it next week at 48 when you can sell it this week at 48? What's the difference, Wayne? It's so confusing. Well, it's not confusing, actually. Yes, less risk, less risk. But what's the basics of trading? Where do you sell? Resistance. Is $48 resistance today? No. But if we drop down to 45 this week, and it was a massive bearish week, okay? So we find ourselves down here. And then next week, let's say Monday or Tuesday, we're up here. It's 48 again. Is it resistance then? Yeah, it's still $48. But under my strategy, right? My plan, my methodology, my whatever, my decision-making processes. I say, well, at 48, when it's resistance, I can consider the opportunity. I can consider it. I don't have I never say like sell, sell, sell. No, no, no. Look, if it's made a lower low, right, I can consider it, right? Yeah, maybe this. Maybe. Why? What am I expecting? Well, I'm identifying it as a downtrend. So if I sell a lower high, aka resistance, then I'm expecting a lower low. Isn't that what a trade plan is? So what can I expect at support? At the very least, a bounce or a retracement. And therefore, if the probabilities are that there will be some sort of bounce or retracement, and I'm selling at that area, then I can potentially lose money, aka risk, right? Okay. Now, if you're trading a 1-minute chart, you're going to look at it differently, right? Because you're trading the volatility more than anything. So yeah, you might have it come up to 48.35, 48.50, 48.78, whatever, and then take another shot down. Okay, we're selling high cycles. I'd probably do that on 5-minute. So even the 5-minute says it's going to go up and then down. Okay, so if you're just scalping away, then sure, maybe you'll sell it here, maybe you'll sell it up here. I'd venture to guess way up there. Okay, but you're making different decisions and not trading price action per se. I think you're trading more volatility than anything. Okay, that's the most likely sell zone if you're a bear scalping a 1-minute or a 5-minute. Okay, and I would venture to guess up to 48.78 and then back down, and probably double bottom. Because, like I said, at the end of the day, I do think the yellow zone is support. So therefore, up, down, up, and then people realize it's not going to fall any farther than 48, and boom, boom, boom. Plus, what's wrong with buying it at 48? If I was going to be aggressive, I'd probably be aggressive this way because I can now have my stop really close. Okay, I'm risking 300 bucks. By the way, do you know if you sold one standard lot here at 49 and it fell to 48, you made $1,000? Yeah, it's nice. Excuse me. Joe says, for the first time, I am relaxed at my charts, watching my weekly swing shorts. USD and yen. Basket sold at resistance yesterday. Oh, yeah. Cool, man. Yeah, it feels good when it starts to click, right? It's also a danger point. It's a bit of a cliche, but it's true. When you start to feel comfortable, instead of feeling comfortable in your skills, you should feel comfortable with the idea that you know the, how the mark how how you say it in English, how to look for market conditions for these trading strategies, and the market conditions will change more often than your trading strategies will change, right? At least they should. Sometimes the market's bullish, sometimes it's bearish, and that has to do with things like news, like FOMC coming up, Bank of England stuff, Bank of Japan. I mean, there's a lot going on, right? This Brexit stuff. There's a lot going on in the world, and it may be in your bias or it may not be. So your job really, because you can't do 24-hour day research, so you're making general assumptions about macroeconomics and geopolitical stuff, and all kinds of things go into your bias. So when you make a lot of money and when you find a lot of success, it just happens to be that the market conditions fit within your bias, but it doesn't happen all the time. So you should sit back and say, well, what worked well here? Because and if you sold exactly at a pivot and you say, well, it's the pivots, and so now you just start throwing your belief into pivots, ooh, that's dangerous. That's dangerous because it's not the pivots. It's because you made the right decision, right? So I would step back and say, it's your bias conforming or not conforming. It's the market conforming to your bias. And in those situations, it works well. And then really spend a lot of time focusing on how will you know when your bias is not aligned with the market or the market's not aligned with your bias? And how do you go more conservative when needed? When do you not trade when needed? Or when do you keep your stop close when needed? Right? So that when you're right, you're really right. And when you're wrong, you're not that wrong. And over the course of an entire year, you'll probably do significantly better than what you've been doing now. Okay? Right? So, for example, often when people throw their faith into technical indicators, they're trading very mechanically. They're not doing the fundamental side of the trading. And what'll happen is, the reason I had to do the swing trading course as soon as possible was that I can't really teach you how to swing trade in July because we don't have the market conditions. So if you went into July and you're just throwing down trades simply because of pivots, what'll happen is it won't work out. And you can just go through 3, 4, 5, 6, 7, 8, 9, 10 weeks in a row and it's not working and you throw your pivots down, you're like, damn it, these pivots are horrible. And you walk away and you're like, well, you'd be frustrated. But just remember, it's not your pivots. It's you making the right decision on your bias and then using pivots and other things as well to identify where the support is if you're a bull or where the resistance is as a bear, and using that methodology to say, I might be a bull, but this isn't the market conditions for me to buy, so I'm gonna be cautious this week. And it's the fact that you're making decisions. It's the fact that you're adjusting your decision-making process to market conditions. It's that control that is bringing you success, not just throwing down trades because it's an M3. You see what I mean? It's like aiming helps a golfer, not the $500 driver. Because I tell you what, the $500 driver works as good as the $200 driver. You know what I mean? But if you spent more time aiming, that would be really good. That would be very helpful if you're a golfer. Why don't you try aiming straight? Because I'll tell you what, you can go to any golf course any day of the week. There's the golfers, your average Joe golfer. Just go out there, have them line up for the shot, and say, "Whoa, stop for a second," and then show them where they're aiming with their feet. You're like, dude, you're aiming 30 yards to the left. He's like, yeah, but I hit right. Oh my gosh. So you're making two mistakes now, not just one. Have you ever seen someone like that? They keep slicing it to the right, so then they aim left. I'd say, well, why don't we go to the driving range and just get rid of the slice, and then you can aim straight. Right? So anyways, I'm trying to keep you from aiming left. I don't know where I'm going. I'm sick today, guys. I'm sorry. I'm sick. I don't know where I'm going with all that. Just, it's not your pivots, bro. It's you. You're what is working. Don't get overly confident. Make sure every day you're thinking about what your bias is, where you want this to go. Are you a buyer in this market? Right? Are you a buyer? And as a buyer, do you like these market conditions? Do you like these prices? And if the answer is no, you're like, I'm not going to trade it. And then you then look for the areas where you would consider it. You're like, well, as a buyer, I don't like the market conditions now, but if oil falls to 48, maybe I'll buy it. If it falls to 45, I'll be very seriously interested. That kind of stuff, right? Knowing that you just can't sell it here, even though it's falling. Great. That's what makes you successful. Will I be teaching swing trade at a class again? Probably not. Oh, excuse me. No, I'd say no. No, the answer is no. So anyways, I'm glad you found success, Joe. That's cool. Yeah. Yeah, Vlad, I plan on doing that. Yeah, we're about halfway done the course. I think, what is there, 3 more swings and one one more monthly? Is that right? Or maybe two more live swing sessions and one more monthly session. So yeah, I think there's 3 hours of live stuff to go, and then there's what? That makes you about 4 or 5 hours behind. Is it 3 weeklies and a monthly? Yeah. Why can't you swing trade in July? There's no trading volume. So remember, when you're swing trading, you're trying to catch the trend. Very often, there's no trend in July. So if I were to teach anything, it would be how to shoot at rabbits. That's right? It's 2 weeklies and a monthly, right? But yeah. So yeah, you feel free to join us. But you have to understand that that's where we were. Yeah. Yeah, you're right, Dan. Daniel says it should be 6, right? So we don't get caught. Yes, I think you're right. I think I'll try to remember to make that change. Thank you. Richard, it's funny. I'm busy doing other things besides Forex as well, and it's just taking up my time. And I get frustrated too with the computer. So it just like so for example, when one monitor doesn't work, I have to go through the process of, is it the video card? Is it the slot on the video card? Is it the HDMI cable? Is it the HDMI DVI? Or sorry, what's the there's a video. It looks like HDMI, but it's bigger. What do you call those? The video. I don't know. So there's converters, and then there's cables, and then there's the monitor hookup. And so when it doesn't work, you got to test like 6 different. No, not the DVI, but there's another one. But anyways, so when it doesn't work, I got to try 6 or 7 different things, and like it's a beast to work with, and I got other things going on, and so it's this to that to the other side. So I'm close to getting it work, but I'm also frustrated with Windows. I get like this sometimes, where I hate it and I don't want it. I don't want to do it anymore. So I need to find a way that I can run, you know, 18 to 20 screens on a Linux machine. That's honestly what I think I want to do now. I want to run MT4 on a Linux machine with 18 screens. I hate Windows. I don't want to buy Windows ever again. I feel like I've been forced into it for the last 30 years to buy Windows. And I don't like Apple either. That's it. I don't like Google anymore. I don't like Apple anymore. I don't Microsoft can go bury itself somewhere. Um, that's it. Like I, I'm gonna I'm gonna go live in a cabin in the woods somewhere, but with high-speed internet access. Yeah. So just give me my Windows XP back. I'll live with XP. Don't worry about it. I was actually okay with Windows 7, except then all of a sudden things just stopped working again. Like, hey, you need to update your Adobe again. What do you mean my stuff like that? Oh, you need to update your Flash. You need to update this other thing. Your Adobe Air. You need to update it. And then you update it, and then nothing works. Like, I'm just sick of it. So I don't know if I have to spend $25,000 building a Linux machine that will run 18 screens, then I think I might just do it. Yeah, it works for you, Richard. But do you have 18 screens on your Windows 10 machine? Yeah. As soon as you do stuff like that, let me give you an example. You hook up 18 screens, and then you say it's time to arrange your monitors, and it labels them 0 through 9, but you have 18. Huh. Well, that's going to be complicated because now you got to figure out there's one, and then there's one because that could be 11, and then there's one which could be 12, and then there's one which could be 13, and there's one could be 14, and there's one could be 15, there's one that could be 16, there could be one that could be 17. You're like, oh my gosh. So you got to move them and move them and move them, move them, move them, and then you're trying to figure out, like, this mouse goes over there, but it pops up over on that other screen. So you literally spend an hour arranging, right? Identifying, moving, hitting apply, then checking your mouse. If I move it right, where do I see it? And then you try to rearrange it. You spend an hour rearranging it. Apply, okay, everything's good. You move your mouse around, you can finally get it all the way across your 18 screens. Great. Everything's good, right? Then you restart, it's all screwed up again. It just, like, forgot your monitor settings. You're like, this is a brand new, clean installed Windows 10. Haven't even installed anything except MT4. It's the only thing installed. Maybe Skype, right? But that's a Microsoft thing now, right? So you can't even set up your monitors without Windows crapping on you. You're like, what? So I don't know. It's just funny. It just doesn't work the way it's supposed to. So whatever. So I'm sick and crabby, I guess. I don't know. But you guys inspire me to be a better trader, and I love you for that. And I love it. I love it when I hear your success stories. Richard says, why don't you go for something simple like 3 monitors? You know, and that probably is going to be my next machine, where I'll get 3, maybe 4, let's say 4 4K monitors. I think you can get like 5K and stuff now, so maybe I'll do that. 4, I'd probably want 6. I'd probably do that. 6 4K screens. Because you don't want 4, because then you got the crack right in the middle and that stuff. So I can see 1, 2, 3, 4, 5, 6. So I only have 6 screens, but they're, let's say, 50-inch 4Ks. So now you need the 4K video cards and stuff. But I mean, you're going to spend some money, but it's not that big of a deal. Money is easy. You just make more money. So something like that, get it down to 6 LCDs. I just have a wall, like a video wall, if you will. So, anyways, peace on earth. May the pips be with you. May our profits be above average. Take care of yourself. You hear? Cheers, mate.